Have you ever wondered why 90% of traders lose money while trading? Did you know that almost 80% of traders quit in the first years of unsuccessful trading? In this video, we will reveal a profitable forecasting tool for smart money traders that can help increase your chances of success in the market. We will be discussing the momentum-based zigzag non-repainting indicator and how you can effectively use it to predict future price movements in the market. Combined with the 200-length moving average, this strategy can achieve a high success rate for both newbies and pro traders. So, let's dive in and learn the concepts of smart money trading to take our trading to the next level. But before that, I want to introduce you to our backtesting service, as it makes it very easy and saves you time when backtesting your strategy. Thousands of traders are using Trader Edge to get an edge on their competition. It also has a lot of features that would definitely take you one step ahead of your trading career, just like the position calculator that serves as a great tool for risk management. Are you not sure how to backtest? No worries, you will also get a full step-by-step backtesting plan which has a $100 value. Not sure how to build a profitable trading strategy? No worries, you will also get a full course on how to build a profitable mechanical trading strategy which has a $270 value. And if you sign up right now, they'll even throw in for pre-made high-quality strategies that have a $100 value. That's for $170 worth of bonuses, all for free. But only if you sign up right now. Trader Edge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below. Okay, traders, let's quickly dive into the strategy. I won't waste much of your time revealing these profitable forecasting tools for smart money traders. For our indicator that predicts market movement, search for the momentum-based zigzag non-repainting. This zigzag indicator is a popular technical analysis tool in trading used by traders to identify trend reversals and key turning points in financial markets. This indicator plots lines connecting significant highs and lows in price movements, creating a zigzag pattern that can reveal the underlying trend direction. The green lines represent a strong bullish hold, while the red lines represent a strong bearish hold. The white lines are weak zigzag lines. Traders often use the zigzag indicator to confirm other technical signals or to identify potential trade opportunities. For example, when the zigzag line changes direction, it may signal a shift in trend or a potential entry point for a new trade. However, it is important to note that the zigzag indicator should not be used in isolation and should always be considered alongside other technical analysis tools and market data. Zigzag predicts and analyzes data by looking for patterns that go up and down, like a zigzag. This helps experts make predictions about what might happen next based on the pattern they see. It's often used in finance, but can be used for other kinds of data too. To better understand how to effectively use this zigzag indicator to predict future price movement in the market, first, add a 200 moving average to the chart. The 200-length moving average is a commonly used tool in forex trading. This technical indicator is calculated by taking the average closing price of a currency pair over the past 200 periods. Traders use the 200 moving average to identify the long-term trend of a currency pair. If the price is trading above the 200 moving average, the trend is considered bullish, and if it is trading below the 200 moving average, the trend is considered bearish. Traders also use the 200 moving average as a dynamic support or resistance level. When the price approaches the 200 moving average, traders look for a bounce or a breakout. The 200 moving average is a useful tool for traders to identify the direction of the trend and potential trading opportunities. Most times, we see price action retest this moving average multiple times, making it hard to predict if the price would go up or down. In this example, we see price action break above the moving average. A newbie, after learning price action closing above the moving average, would go long and enter a trade at this candlestick. And what happens? Price moves the opposite way and closes below the moving average. And if he decides to open a sell position, price does what it does and closes in the opposite direction. You are not a bad trader, you just don't know the concepts of smart money trading well enough to know that price action does not just respect these levels. Even if you use a 1,000 length moving average, you would still end up with these traps. We can see how price action keeps creating pivot points that, when you match them, turn out to be zigzag lines. These zigzags happen for a while before it breaks out, retracement, and finally continues to move upward. You don't necessarily have to draw or identify these lines yourself. You just simply have to add the zigzag momentum to the chart to get a better reading on the market. Combining these two indicators would achieve a high success rate for both newbies and pro traders. Let's quickly dive into the chart and show you how these trades were made possible using the smart money concept. For the settings of the indicators, no input was adjusted. Just work on the visualization for better reading. We can see that the price is currently bullish as it is above the 200 moving average. Looking at the price action, it is declining from its bullish form. Price action declined and closed below the 200 moving average. From this point, we wait for our trading setup to be complete. To complete our trading setup, we wait for the zigzag momentum before we decide on trade entries. Notice that we got our first zigzag line after the cross on the moving average. Note that what we need to see after the first cross on the moving average is at least 2 weak zigzag lines before we identify areas of support and resistance. We can notice that we have our weak zigzag lines as represented by these white lines. This is the point where we draw our trading zones and wait for the breakout to occur. So, what we do is simple. From the point of the first cross to the point we got our second weak zigzag, our highest and lowest points tend to be at these levels. We would then place a box to cover these levels. Inside this box is our valid trading zone. Next, we wait for price action to break above this box, either above or below the box. Whichever way we tend to see prices break out, we enter for a valid trade. That is to say, if the price breaks and closes above this box, we go long, and if it breaks and closes below this box, we go short. Now we tend to see the breakout above this box, and this serves as a valid entry to go long. That's not all. Please make sure that before you draw your trading box, price action must have at least crossed the moving average twice before any decisions on drawing the trading box are made. Don't get too excited, as there is more to this, so you don't make mistakes while using this strategy. Please, if you are enjoying our videos, don't forget to smash the like button and subscribe to the channel, as it motivates us on the hunt for the Holy Grail. Moving on. We see how profitable this trading strategy tends to be, but keep in mind that no matter how good any strategy tends to be, it can never be 100% profitable. You would meet setups like this. So we have our setup met and trading conditions present. We have our 2 weak zigzag lines present. We have our trading box present. And price tested our 200 moving average twice. Highs and lows of the box have been created. Now if we entered this trade at this point as our breakout, we can notice that price action took us out of the trade as it reversed. So make sure to use proper risk management for this strategy. Thanks for watching. See you in the next one.